Microsoft and Activision have secured an extension to close their $69 billion merger deal amid talks with UK regulators. With more, we're joined by our own Dan Howley. This thing has had a lot of twists and turns, and now it looks like they're getting a little more time.
Yeah, a lot of ups and downs here. The original deadline passed yesterday. That would have included a $3 billion breakup payment that Microsoft would have had to pay to Activision Blizzard, but we don't have a deal. So now the companies have agreed to a new deadline. That is going to be September 15th, but there's going to be one in August for August 29th as well. If they don't get the deal done by then, it would be $3.5 billion. If it can't get it done by September, it would be $4.5 billion. So a lot riding on this getting done within the next month. And so, overall, both parties say that they're optimistic. We have Activision saying the recent decision in the U.S. and approvals in 40 countries all validate that the deal is good for competition players and the future of gaming. And then Microsoft's Xbox chief, Phil Spencer, basically saying, look, we can get the deal done now in the U.S. technically, while the FTC kind of does its own internal action, but they want to just kind of wait, get everything sorted out with the UK. So does this mean that the deal is going to go through? We're still not 100% sure, but it's looking more and more likely that this will happen. It would be the biggest merger or acquisition in the gaming industry ever at $69 billion. So absolutely massive, and would put Microsoft as the third largest gaming company by revenue in the world. So just behind Tencent and Sony, it would be a big jump for them, especially after, years and years as kind of being like the not even second but third banana. So it's,
All right. Well, let's talk about something else in your wheelhouse. We'll talk about the chip space. Chip equipment maker, specifically ASML, reporting its results today, seeing orders surge amid rising demand in China. So what do you make of this, especially when you think about the broader chip space, Dan? Yeah,
so they raised full-year sales growth forecast to about 30%. That's up from 25% in the prior forecast. And, it's interesting. What ASML is saying here is that it's not its top of the line equipment. So ASML, just so everybody knows, is an equipment manufacturer that provides the equipment that chip makers then use to build chips. They're saying that their ultra high-end stuff, their extreme ultraviolet systems, the demand for that isn't exactly where they would like it to be, just because companies like TSMC, Samsung, and Intel are building out the plants that will eventually need these kinds of systems to build chips. Meanwhile, over in China, they're still getting the deep ultraviolet devices, the systems that would put together chips. They're not as high-end as the EUV. That's because of the whole sanctions and regulatory requirements now going through China. So they're getting that second-level kind of production capability. They're seeing those pick up, though. And that's just because the demand, as you said, in China is rising. And so what does this mean for the rest of the chip industry? Well, we kind of have to see. It means that, obviously, despite demand going up in China, it's not going to be the super, super high-end stuff from these companies. So, we'll see what it means for Intel, NVIDIA, AMD, Qualcomm, all these other companies when they report their earnings. But, on the PC side of things, where AMD and Intel have just been, taking it like punches to the face, there was a report from Gartner saying that the downturn might be going up again. So we might be seeing an end to that downturn, though there's still a decline. It could start to even out maybe around 2024. So still not great for the immediate future, but eventually things will get better.
Light at the end of the tunnel.
Yeah.
Dan Howley, we appreciate you making time, especially before your big trip you have coming up.
Thank you very much.
All right. Thank you so much.